Thanks for tuning into Talking Point. I'm your host Niraj Shah, and IT is the big sulker in trade today. In fact, Nifty IT is the one which is dragging the markets a lot lower because, much to my surprise, banks are doing a lot better than what IT is. Now, this may be well because Nasdaq has had a bit of an iffy yesterday, but one would have thought that Cognizant's read-through might have been positive, and that might have helped Nifty IT, but not quite. Just get the Nifty IT gainers losers on your screen before I get in my colleague Mahima to talk about that one tech platform related name which is bucking the trend. But look at that, the kind of pressure on IT, it's widespread. It's not centered on one or two names. Across the board, there is a bit of a pullback which is leading to Nifty IT lower, and that's a heavyweight index as well, second only to the Bank Nifty, and which is why you're having this bit of an issue with regards to IT. But you know, a tech name which is doing very well is Zomato. And Mahima Johnson to tell us what the brokerage view has been on Zomato for the stock to be up 13% as we speak. Mahima, very quickly, what are brokerages saying?
Right, Niraj. So brokerages are pretty bullish on Zomato, and their upside ranges between 17 to almost 47% now. To start with, Citi, Citi has given a target price of 280, which is an upside of 17% from yesterday's closing. They're saying that it remains their top pick in the internet segment, and they're saying that they're raising the gross order value estimates by 1 to 2% for food delivery and 18 to 16% for the quick commerce. They've estimated the FY27 estimates GOV growth of 20% CAGR, and for quick commerce this is 50% plus CAGR that they're expecting, and overall EBITDA growth of 55% CAGR over FY25 to 27 estimates is what they're saying. Nuvama is also bullish on Zomato, given a target price of 285, which is an upside of 20%. They're saying that management is not dialing down on growth addition, and they're now valuing the food delivery at $14 billion and quick commerce at $13 billion. Axis Capital again bullish on Zomato with a target price of 287, where they're saying that consolidated revenue has beaten estimates by 9%. EBITDA of 300 crores is supported by Blinkit despite the strong store expansion that they're doing, and they're raising FY25 to 27 estimates top line by 7 to 12%, and they're also saying that Zomato execution is best in class. Lastly, CLSA has maintained outperformance with a target price of 350. Now this is the highest target price amongst a lot of brokerages that have come out today. They're saying that Blinkit has seen good profitability growth in the past few quarters, and Blinkit is pulling away most of the competitors at present. And they're also saying that food delivery is also in the middle game, but with a strategic edge, and they raised their earnings estimate by 6 to 36% for FY25 to 27 estimates. So this is the overall view of what brokerages are saying about Zomato.
Okay, thanks a lot. 14.5% for Zomato. Gautam Duggad, Head of Research. Mahima, thanks for bringing that. Gautam Duggad, Head of Research at Motilal Oswal Institutional Equities, joins us right now on the show. And Gautam, I want to talk about how you've thought of the quarter thus far, because you track numbers better than most that I know. But I'm compelled, Gautam, to ask you about a particular name. And I'm not asking for a buy, sell, hold from you, of course, but just a view on what is happening with some of these tech platform businesses, particularly what Zomato has done. They have a food delivery business. Then they have a Blinkit, which is growing at the rate of knots. And now they're launching a third layer, which is District. I mean, there's something quite stunning happening with that landscape, and Zomato in particular.
Hi, Niraj. Good morning. Thanks for having me here. See, Zomato, when we initiated last year in April at a price of 55, and then we added it in the model portfolio at 75 rupees, and we are still holding it as one of our top ideas in the model portfolio. We also raised the target price yesterday after these results to 300 rupees now. And I thought that's a decent upside. But looking at the way stock is behaving today, pretty soon that upside will be less than 10%. Now, issue is predicting Blinkit is becoming a bit difficult because they're defying all expectations. If I look at my numbers, our DCF-based target price is 300. And we are assuming a 75% CAGR for Blinkit. And now Blinkit contributes 171 rupees out of that 300 rupees of target price that we have put out. If that 75% number drops to, let's say, 50% CAGR, which you would reckon is still a very decent number, in that case, the target price drops to just 180 rupees. And value of Blinkit comes off from 170 rupees to 100 rupees per share. So essentially, the upside that we have seen in the last 3-4 quarters is being led by Blinkit, whereas the food delivery business has stabilized now. It's in a steady momentum. The real upside that you have seen over the last 1 year or so has come on the back of phenomenal GOV growth that you have seen in Blinkit. And our expectation is that it's going to be very difficult to predict some of these numbers for a stock like Zomato on a quarter-to-quarter basis. So if you're holding it, I would suggest that you keep holding it because it's in uncharted territory right now, both the business as well as the stock valuation. Now, Zomato, basically today, if you look at after today's rise of whatever 17-18%, the market cap is now almost touching 2.5 lakh crore, right? Incidentally, Neeraj, because a couple of other consumer companies also reported numbers over the last 3-4 days, this 2 trillion number is becoming a good threshold now. Even Trent has crossed 2 lakh crore market cap day before yesterday. Varun Beverages crossed 2 lakh crore market cap a few days back. These are all companies which have, very different sort of, or rather a slightly differentiated positioning in their respective core businesses. They're not your typical plain vanilla simple consumer businesses which have been consistently growing at whatever 8-10% for last 15-20 years. These are businesses which are growing at more than 30-40%. I remember for Trent, we have been raising earnings estimate for last 3 quarters by 15-20% each. And it's a stock which we upgraded just a year and a half back at 800 rupees. Today it is 6,000 rupees. So in consumer, there is a very divergent trend which is playing out. Wherever there is growth, which is there, market is very, very discriminating in terms of the valuations that it is according them. And wherever the growth is very subpar or normal 8-10%, market is just not interested in looking at them. You look at Varun Beverages, 3 years back, the profit used to be 320 crores in CY20. They closed CY23 at 2100 crores of profit. Our expectation of next 3 years, 4,200 crores of profit. So out of nowhere, Varun Beverages in last 6 years has now become a 2 lakh plus kind of a 2 trillion plus kind of a market cap. So growth is becoming a single largest differentiator across the Indian consumption space, whether it is staples or whether it is discretionary.
Okay. Well, let this be not just a Zomato conversation, but it's great to get your views on consumption, Gautam, because you track this story so closely. Gautam, what's a blue sky scenario for something like this? And then I'll of course ask you a question on this earnings season as well. But a blue sky scenario for some of these differentiated consumption plays, because you look at any valuation parameter, FY25, FY26, optically they look very expensive. Then of course you may put in growth rates and they might look a lot more reasonable, but otherwise they look very expensive, right? A Trent, a Varun, a Zomato, etc. What's a blue sky for these?
So Niraj, no offense meant, but I think it is futile to predict blue sky scenarios for some of these stocks. And I'll give you a reason why. Titan is a stock, for last 15 years has been our top idea now. I remember on the day of demonetization, the price of Titan was 360 or 350 rupees. From there, it is almost 10x now in 8 years. It's the only consumer company of a reasonable size in the last 5 years, which has compounded top line and bottom line both at 20% plus. And at every price, the stock was expensive, from 100 to 200 to 350 to 500 to 1000, and now whatever 3000 odd levels. Even at 1000 rupees, if you had done blue sky in 3 years, you would, if you were very generous, you would have reached a target price of 1700, 1800. The fact of the matter is stock is 3500 rupees today, right? You look at Trend, we've been having internal conversation after we upgraded the stock at 800 rupees 2 years back. At every, 20-30% rise, we discuss, what are the numbers, how's the stock looking, it is too expensive. So we had this conversation when Trend was 1400 rupees, then at 2800, then at 3500, and last conversation we had 3 months back was at 4000 rupees. And we realized that whatever numbers we are penciling in, they are beating those estimates, both on top line and bottom line. Then we reached a simple conclusion that till the time some of these companies do not disappoint on expectations or growth, there is no point just taking a particular P as an anchor and moving away from the stock, because you could have pretty well as much done that at 3,000 rupees trend price also 7 months back, right? Because at 3,000 also trend was not cheap, or rather at 1,500 also trend was not cheap a year back. So there is no set formula to put a blue sky, because all of those numbers in companies like this where growth numbers are beating your expectations by a wide margin, those blue sky scenarios become academic now, right? So you are seeing that with Zomato, it's playing out right in front of you. April 2023, the price was 45 rupees. We initiated at 55 rupees. Our first target price was 80 rupees. The fact of the matter is, today, because of the series of beats in estimates for last 4 or 5 quarters now, we are ourselves putting a target price of 300 rupees. I mean, a year back, I would not have imagined that 2026 profit estimates for Zomato could be 3,000 crores. Or for that matter, Blinkit will become such a big driving force of the overall valuation of Zomato. So, you have to build your own guardrails. You have to build your own comfort zone around growth, and then operate within a reasonable band on that. Because forget individual stocks, Neeraj, even at Nifty, when last year in August, we were doing a blue sky scenario exercise for Nifty, blue sky. I think Nifty was around 18,500 or 19,000 then. And we took 20 times P to FY25 EPS, which is a standard P for Nifty. We reached a target of 22,800. And because we were looking at blue sky, we assumed government winning the elections, Modi coming back, political continuity, strong balance sheet man, all of that. And we applied a 10% premium to that. So we reached a target price of 25,100 for Nifty on a blue sky basis for calendar year 2024. Today, it's a base case now, or rather, it's already come. So, in a market which is so furious with liquidity, sometimes these conventional parameters of valuations or blue sky scenarios, they make no sense.
Okay. Gautam, I wanted to talk about Q1 earnings, but we have time for one more question, and I'm loving this piece of the conversation so much that I'm tempted to extend it by adding one more sector, if you allow me, instead of talking about Q1 earnings. Because you mentioned about how some of the ferocity of earnings, so on and so forth in this consumer business makes it futile to look at blue skies and makes it difficult to pencil in what valuation should be given. I want to bring in a sector which is having fabulous order books, and that is defense. Companies are talking about some serious growth opportunities. I was speaking to one company which spoke, I mentioned this yesterday as well, 100% growth in FY25 and 50% growth for the next 5 years after FY25, right? Now my question to you is this: if it's difficult to predict the growth and the valuations in a business like Zomato or some of the others which are growing at such a pace, how difficult or easy it is to call a top on the valuations and the growth of defense stocks? Chalk and cheese, but I'm tempted to ask you.
Yeah, I mean, I had put out some data 2 weeks back on defense and railway stock. Let me give you the brief highlights of that data. 3 years back, all defense stocks put together in India, July 2021 I'm talking about, so it's a post-COVID number, not too far back into the future. July 2021, all defense companies put together, the market cap was 1 lakh crore. March 24, the market cap was 6 lakh crores. Today it is 11 lakh crores. So in 3 years, the market cap is up 11 times for defense companies. Profits have doubled from 7,000 crores to 17,000 crores, right? So trailing P, which was about 13, 14 for defense in July 21, or rather, 14, 15, because 7,000 crores profit and roughly 1 lakh crore market cap then. So 15 P you can say. Today, the trailing P is 60 for defense companies. Do remember, unlike consumption in defense, you're also dependent on government policy, because government is the single largest customer. So to that extent, the vulnerability in policy and decision making can have a disproportionate impact on valuation multiples of B2B stocks like defense. I'm not saying growth is slowing down or anything. We don't have a coverage, so we don't have estimates there except for Bharat Electronics, which is part of our model portfolio. But I'm saying broadly, if you look at top down on defense or railways, they are hostile to the government policy making. For the last 10 years, they've had a very favorable and a benign policy, backdrop. Look at railway similarly. A year back, 1 lakh crore market cap. 7,000 crore profit again, right? Today, profit is 13,000 crores, but market cap is 7 lakh crores. So what was a 10 trailing P has become 55 or 54 trailing P. So put together, if you just do, because both of these sectors have been in tremendous momentum, together they had a profit of 15,000 crores or rather 3 years back in July 21, when the market cap was 2.25 lakh crores. So combined trailing P was 15x. Today, combined profit is 30,000 and combined market cap is 18 lakh crores. So 60 trailing P. So while they can continue to grow, you have to just remember two things: that they are dependent on government policy making. The politics matters, and at the same time, you are getting into the stocks at 60p. They are not consumer companies where you have 100% free cash flow conversion, good dividend payouts, and a stability in growth, because the you can predict the growth in consumer companies, at least in a stable companies. I know in Zomato and all you cannot, but broadly, when you look at consumer basket, you can predict. In defense, you have to take a call every 3 years, 5 years.
No, fair point, fair point. Gautam, so good to do this chat today, so pertinent, but which means that our Q1 review chat is pending, which we'll do probably next week or week after next, depending on when you find time. But thank you so much for joining in today.
No problem. Neeraj, anyways, 1Q is very lackluster so far. We are just about having 5% growth for the 40 Nifty companies, and we have seen a marginal 1% start.
No, but still, it'll be worth to get the details from you, Gautam. So we'll try and do that depending on when you find the time. But thanks for joining in today.
Most right. Thank you.
By the way, a company which hasn't had quite a lackluster quarter is GE Shipping. And on the other side, we'll talk to the management. Stay tuned.